Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And we just got ourselves a very interesting Bitcoin, XRP, and actually entire crypto update. Why? Because the inflation numbers in the US have just come out and it was interesting. So the light of the sun is shining like crazy in my eyes, but it's all worth it for the video. So make sure you press that like button. To not waste anybody's time, the inflation numbers came out and the number was 8.2%. That's the year-over-year rate, which is exactly the number that was expected as well, but it was relatively a lot higher than the majority of people I've spoken to had expected. Now, as we've explained a multitude of times before on the channel, whenever the inflation numbers come out, the prices get pretty volatile. I'm talking about Bitcoin, I'm talking about stocks, talking about nearly everything, even your foreign currencies. Or domestic for that reason, just any currency really. Whenever the inflation rate is lower than the expected number, people are usually pretty excited, albeit given that the inflation expectation was lower than the previous inflation numbers that were announced. In this case here, the previous inflation number was 8.3%. Logically, people want inflation numbers to go back down to roughly around 2%, and you can kind of guess 8.3, 2, they're pretty far apart. We'd like to be as close to 2 as possible because that means less preventative measures in the future that potentially could take down GDP further, or more importantly, GDP growth and impact it negatively, recession. Now, in this case here, the number expected was 8.2, which on its own was already pretty relatively very high. We thought, okay, if the number is going to be between 8 and 8.4, most likely we're going to see some sort of pump and dump like we've seen with the previous announcements where this similar scenario happened. Even with the interest rate, a similar sort of scenario has happened before. If it's below 8, with a significant margin, like for example, 7.6, there's a very good chance that because the inflation is relatively low, the next interest rate increase is going to be relatively low, even though these are lagging measures, but that we're basically getting back into a healthier economy without heavy hikes. If the rate was above 8.4, that means that the inflation was actually getting worse, which meant that most likely the interest rate hike was going to be even worse, which would increase the chance of a crazy recession, or rather of just an increase in interest rate makes the cost of capital worse, which at the end of the day makes everything just worse, and that would have been more bearish. Now, since the number was exactly as predicted, our scenario was pump and dump. And even though right now, on the grander scale, Bitcoin has broken down, you can see that over on the 1 minute, things were actually pretty interesting, as we did indeed witness what we expected, albeit a lot more crazy than I honestly expected. My honest expectation was that we were going to move roughly around 3% towards the downside from the crazy up that was created. It was actually 5% towards the downside after a whopping 2.5-ish% pump, which is also a lot more than I expected personally. Now, we said before, there's one way to actually trade these crazy announcements, and that is to place hedged trades. I know it might sound kind of crazy, but hear me out. What we've talked about on a couple of different occasions in the past is these hedged trades, because we know the volatility is very high. These are risky, but they do work to a certain degree. And again, hear me out. There are two ways to make this work. One is to take profit on whichever one of these trades is in profit quickly to then basically have double profit. That would basically mean that, okay, you have a long and a short that you open at the, let's say, 1 minute mark before the actual event, or even here, 5 minutes or 10 minutes before the actual event happens. Let's say you set a target for 3% towards either direction, and you place a stop at 3% towards either direction as well. Or let's just say 2.8 for that minute. You could have, theoretically speaking, opened the long and the short at this point, taken your profit once it hit, for example, 1% in profit towards the long direction, close the trade, and then let this short ride out because you were expecting a pump and dump scenario. Since that's really unsafe because you don't know if this pump is going to continue more than 3%, taking you out, for example, or if it's going to dump at all, it's just an expectation, it's a probability game. The long and short basically work in the sense that, okay, if it goes 3% in either direction, you let that one slide and you close the other. So let's say we have a stop loss at 3% towards either direction. That basically meant that our short position would be the one that would survive and would actually take us all the way towards minus 5.2, which means 5.2% profit, right? For example, if you took the top of the top. These percentages are shaken out of my arm here, but you get the principle. You can do this with 1% as well, for example, or 1.5 or 8%, 2%, doesn't matter. But at the same time, the long would actually be stopped out because it hit your stop loss at the bottom. Just quickly let you guys know about that because a lot of people were asking me previous time during our FOMC meeting of last month what we were doing. But I digress though. Bitcoin is at a really interesting point right now because, as I said earlier, the interest rate numbers that are going to come out shortly here are most likely going to be relatively high. The US has not seen interest rate like this in a very long time, albeit that the inflation is actually at the lowest number in months, which is funny for me to say since it's 8.2%. Bitcoin has broken a couple of crucial levels towards the downside. It's not too awful just quite yet. And the same thing kind of goes for Ethereum, which is why most technical analysts I've spoken with here are actually bearish on the short term. But I'm going to tell you guys this. The most important thing that I'm watching for every single day is the 200 weekly moving average. The fact that we're still below this moving average suggests to me it is an easy opportunity to buy. The fact that we're at 18.3 thousand though makes it seem, well, that we're pretty close to the local bottom we made a couple of months ago, which people might find scary. We could literally on the weekly here, depending on where we close, have the lowest weekly close in years. Nah, it's actually only about yeah, we consider this years almost because it's December of 2020, so roughly 2 years. I would say this. The lower we get, the lower the closes. There's indeed on the short term some potential to go down further. And supposedly, or I would say logically here, if we do end up closing at this level right here at 18.3 or lower, actually in reality, if we close anywhere below 17.7 or even 17.6, everything's just going to go haywire, but we're not there yet. If we close anywhere below, let's just say to make it rough, $18.5 thousand, things are not looking so good on the short term. But if you take it to a medium term, this means that we are that much closer to actually grabbing ourselves a Bitcoin bottom for a very, very good buy. Again, you can see for yourself that Bitcoin has been ranging for a very long time. It has never really gone below that $17.7 thousand mark. It's made a couple of low points, but the lowest point it made was a little while ago here, September 22nd, in terms of a close. Today, things could change though, as we are actually at a lower point that we saw in September 22nd. And if we do break, if people continue to be negative, we could actually go towards that $17.7 thousand barrier. And that could mean that we're actually setting a lower low for Bitcoin. That would obviously be bearish on the short term for sure. There's absolutely no denying that. But I want you guys to realize that for all coins, the same thing works for Bitcoin, for Ethereum. It all works in the same manner, that the lower you get, the less risky it gets. This is something a lot of people don't understand about investing. The lower the prices, the less risky it gets. I think there's a book by Benjamin Graham, I believe it is. I think it's called The Intelligent Investor by Benjamin Graham, where he actually describes this perfectly. It's just the higher it gets, the more risk you have of a fall. The more it has fallen, the more chance that it actually goes on the upside again, right? I mean, let's just be realistic here for a little second. Bitcoin in this little time frame has dropped roughly 73 or so percent. Many people would wish they got the entry that we are getting right now. And even for holding for a very long term, I'd say $18.3 thousand, which we're currently at, is ridiculously beautiful. And that actually makes me think about XRP in the sense that XRP has actually held up quite well if you realize what the price is doing right now, where in comparison to Bitcoin, the last couple of weeks here have been very freaking beautiful for the crypto. You can see it. Take a look at this just for a second. How well it's recovered and how far away it is from the local lows that we saw earlier in 2022. Ethereum is also actually falling below major supports, falling below the 200 weekly moving average, is actually falling below its ranging target. And the major supports for Ethereum are all the way towards $1,050, $1,000. But it's all going to depend on Bitcoin, on whether or not Ethereum and XRP and stuff like that actually go down further. In terms of what happened yesterday, we had FOMC meetings and or minutes, and actually Fed officials expect higher rates to stay in place, meeting minutes show. Most of the things we've talked about over the last couple of weeks have showcased again that the market is not recovering. There's more of a chance of a crazy recession coming up, which is most likely going to be negative for Bitcoin. Because even though it's supposed to be bullish, right? The financial system collapsing is bullish for Bitcoin. We have so much manipulation and we have so much distrust in this newer financial system from the upper echelons. I mean, BlackRock has actually openly said we're noticing a crazy demand from our institutional clients. We want to focus on getting them to be able to buy this stuff. We've seen Google now accepting it for cloud payments. We've seen the Apple CEO actually openly say he owns Bitcoin as well. And so it kind of goes on for a little while. Yet prices go down and people don't understand that this is going to change the way that finance works. And so it kind of goes for multiple different cryptos as they have different use cases. That leads me to believe there's a good chance that it's going to have this direct correlation until it snaps. And I want to be there when it snaps. I want to be there buying the freaking dip the moment that this snap goes off and the markets start to value it more accurately for what it is. Because Bitcoin is worth so ridiculously much. The crypto market is worth so ridiculously much. It's just being put on a very, very low fire right now, deliberately, if you're asking me. And I think at some point it's going to change and there's going to be a crazy rocket blasting off. It might very well just be the next time we get our interest rate numbers because people are fed up with the craziness of the world. Let me tell you guys one more thing. If you're looking for a place to trade, check out Bybit or any of the other links that I've put down below in the description. There's a couple of crazy bonuses that you can get. And right now, if you deposit $1,000, you get $1,000 for free to make in terms of Ethereum trades. It's actually pretty huge, something I've never seen before, but it's a huge action. Go ahead and check it out. And to come back on it, we have our decision the 2nd of November, so in about 2 weeks from now. 2-3 weeks from now. People are thinking this decision is going to be negative, and it could be again that the market is going to react so negatively to all of this that maybe people are finally going to snap out and appreciate more with the technology we have in front of us. All I can do though is just buy on spot. In terms of long positions or short positions here, things are quite scary. I personally think buying this bottom is ridiculously smart, but it's my personal opinion. I think longing from the $18.3 thousand range, or even a little bit higher than that, is not actually a very bad choice. I think there's loads of money to be made, and I think you have a higher likelihood of being right than being wrong, which is usually when you take the trade. So again, it is just my opinion, not financial advice, but I think the risk to reward is looking pretty good for some openings right here at this point. And honestly, just buying Bitcoin on the spot or buying crypto on the spot here is also not really a bad choice because we're back to these ridiculously low levels that we've not seen for roughly 4 months. So yeah, that was it for today's crypto video. Actually, we've seen some of these Bitcoin prices last month in September, but generally speaking, $18.3 thousand. We've also seen all the way back in 2017, right? So this is a juicy place to buy if you ask me. And that was it for today's video. Hopefully you guys all enjoyed it, and I'll see you guys again in another one, most likely later today or tomorrow. There's so much exciting stuff happening. I got you guys.